Good morning and welcome to GrainTV.
Good afternoon and welcome to GrainTV.
Good afternoon, welcome to GrainTV today.
Cody, what's your favorite number out of this morning's barrage of data?
Yeah, I'd say that.
Afternoon, welcome to GrainTV. It's our Friday afternoon episode on September 9th. Brock, it was a choppy week of trading, a lot of position squaring ahead of the USDA report. But when I look at the numbers, I can't help but notice that wheat took a really big hit this week. What do you think was driving the wheat market down?
Yeah, one of the biggest things driving the wheat market has been the dollar index lately. We've seen a sharp rally in the last 7 to 10 days, which we know affects the wheat market primarily, the biggest. And virtually, we're at a 6-month high right now for the dollar index. We've seen a lot of debt concerns coming out of Europe, continues over there. And then we also see world competition on the export market for wheat, particularly out of the Black Sea area, and India is actually sticking their nose in there now and saying they're going to be exporting some wheat. So looking at that is pretty bearish for the wheat market.
Yeah, it's amazing now. High prices cure high prices. We've got exporters back in the game. You know, certainly, like you said, India, also Australia's crop is not on any sort of disastrous route like it was this time last year. So we've got a lot of things that are sort of weighing on that wheat market right now. But really, exports, I think, are something that everyone's sort of focusing on right now. What did we see in the export game this week?
Yeah, we saw a slight uptick for all three of our commodities. That doesn't really say a whole lot for what is actually going on in the export market. We have been pretty weak in the last few weeks. So adding to a low number is, not a whole big deal. But year on year, we're actually down on corn about 6% last year compared to the year before. And soybeans were actually up about 1%. So a little bit of strength in soybeans from last year. But this year, as we know, we have been losing a lot of new crop sales to South America still, which is pretty surprising.
Yeah, we know this week China came in and bought November delivery beans from South America, which we view as pretty negative in spite of the fact that we should have a crop to sell to them by that time period. So, when we think about what's going on in the next few weeks, we've had a really late planting season. Farmers are going to be getting ready to harvest that crop, but what does the weather look like in the coming few weeks here, Brock?
Yeah, this week brought us our first real frost concern. Next week, it looks like midweek, we are looking at a hard freeze for the northern part of our growing areas. North Dakota, Minnesota, Wisconsin, Michigan, they look like they could be affected. It looks like for the most part it's going to stay north of there, but if it does come a little bit farther south than what was anticipated, we look at soybeans in particular being affected the most, with them trying to still fill their pods with that late planting that they had this spring.
When I look at your map there, Brock, I realize that some of those key areas in North Dakota, Minnesota, especially northern Minnesota, that had some really late planted crops, and so if they do get freeze hit in that area, that could be detrimental for development, would you say?
Oh, most definitely. And, with that early spring, we were hoping for a late fall. Doesn't look like it's going to happen right now. Hopefully this frost doesn't go down too far into our growing areas, just to keep us out of that danger zone.
Exactly. Hey, when we come back, we'll be talking about what to expect out of the USDA supply and demand numbers. Welcome back. Hey, on Monday morning, we're all eagerly anticipating the USDA supply and demand report numbers. We've been reporting on them here on GrainTV. A lot of analysts have been putting out their own estimates. Brock, what do you think the trade is looking for in Monday morning's report?
Basically, what we're looking at here is an average of all those analysts, and they came up with about 148.7. I'm looking at the USDA. It's probably going to peg it a little bit higher than that at about 150. Anything below that is going to be slightly bullish. Anything above that is going to be bearish for the market. But basically, I'm really looking at the wide range that we're seeing here. 143 to 153 shows a lot of uncertainty in the market on where those corn yields actually are. I've heard some early estimates coming out of southern Illinois that they're actually getting better yields than what they were anticipating even a week ago. So I'm looking at that as possibly a bearish factor going into this report.
Yeah, and we know USDA's August number was at 153. If the market actually got surprised by a 154, 155 yield, this market could really turn sour pretty quickly, wouldn't you say, Brock?
Yeah, I definitely do think that the demand really isn't there. We saw exports not meet expectations this last year. We saw ethanol use not meet expectations. They've already revised feed use a little bit lower than what they had originally anticipated. So I'm looking at that as being, fundamentally that's going to be pretty bullish for the market as well.
So, when we look at the supply and demand table, not only are we looking at new crop production numbers that the USDA is going to be putting out, but also the old crop stocks revisions, because we're going to have potential revisions to exports and ethanol, just as you said. What are you thinking about in terms of old crop stocks? Will we see a big revision higher in that number?
I think we will see a fairly substantial revision higher. I'm looking, maybe to put us right at that 1 billion ending stocks for last year, which would be about a 100 million bushel increase.
Which obviously would take some of the blow out of a shock on the yield side if we do come in on lower yields.
Right.
So, I guess, be sure and stay tuned, because we'll be covering it Monday morning, but our belief is that this is probably where the trade's going to be looking come Monday morning. Hey, Brock, let's talk a little bit about farmer marketing strategies here. We know farmers are getting ready to harvest, and a lot of times their attention turns to combining, not necessarily marketing, but I want to take a look at some of the marketing opportunities that are out there right now. Corn and soybeans are much different animals right now. We know on the corn side we have strong basis. Right now, it will probably continue to be fairly strong into harvest because of the crop supply concerns. But on the demand side, there's not a ton of demand that is pushing this market higher. So right now, I'm looking at good opportunities to try and lock in forward prices out into, let's say, June. In fact, some of the carry in the market is pretty favorable for going all the way out to June. If we look at this table that we have before us, you can see the forward carry that's built into the market, about 27 cents in Iowa from October to June, 30 cents from from October to June in Illinois. If you factor in about a 3 cent a bushel per month carry or cost of carry into that, that leads into a profitable situation for some farmers to lock that in. And especially in some states like the Eastern Corn Belt of Ohio, even up north in North Dakota, you've got some favorable opportunities. Where I really see the best opportunity for storing this year is not so much on corn, but really on beans. And this is on basis only. I'm looking at basis opportunities that really favor beans. I think the basis is going to be exceptionally weak at harvest. I think the supplies are there. I think the demand is not there, as evidenced by the export market. So I look for basis levels at harvest to be fairly weak for beans, which means farmers should be locking or storing those beans, looking to carry them and capturing that appreciation in the bean basis over the next 3 to 4 months. So again, that would be my advice to farmers, is to start looking at bean opportunities as the ability to capture basis gains.
Right. And if you want further analysis of your local area, make sure you get a hold of us at GeoGrain, and we'll gladly help you out in that regard.
Exactly. Hey, thanks for joining us. We'll see you bright and early Monday morning for the supply and demand report. Follow us on Twitter, follow us on Facebook, or visit us online at grainhedge.com.